In money matters, the JSE All Share Index jumped over 2% to a near two-week high, extending gains for the third straight session on the back of hopes that the Federal Reserve might ease away from aggressive interest rate hikes. Thabiso Mamathuba is an investment analyst at FNB, and she joins us now for the very latest. A very good afternoon to you. It seems like it's following that trend on the markets, with the local trade being upbeat for the first time in a while. Talk us through what's driving these gains. Thabiso, it's Dudu. If you can hear me, are you there? Okay, unfortunately not. So we'll re-establish that connection and tell you what's happening on the markets at midday at least. For now, though, we can tell you about this. Today is day 2 of the Judicial Service Commission interviews, with 11 candidates vying for the 5 vacant posts at the Supreme Court of Appeal. Yesterday, High Court Judge Piet Koen and acting SCA Judge Daisy Molefe had their interviews conducted. Judges Matter Advocacy Officer Zikhona Ntlebe gives us her views on yesterday's proceedings.
So yesterday's interviews were not as bad as they've been in the past, and I think that can also be attributed to the chairperson, which is something that we've observed, that there are different chairing styles that the different chairpersons of the commission employ during the interviews. So the questions that were asked were all about what questions that were to be expected: transformation, the candidates' qualifications, their experience and expertise. But there should be more to that, because this is a Supreme Court of Appeal. These are Supreme Court of Appeal interviews, and the questions that are asked to candidates should be specific to the requirements and competencies that are required of a person at the SCA. But we have not seen much of that. But another concern that we've observed is the time that interviews take for each candidate. So yesterday's first candidate, Judge Huele's interview, took about 2 hours, and we saw a fluctuation of the time that each candidate is interviewed for. So that's something that has to be observed by the JSE and has to be corrected. Each candidate is supposed to be allocated 40 minutes per interview, and we don't see that happening. So the JSE is not following its own rules, basically.
Let's go back to money matters, with the JSE All Share Index jumping over 2% to a near two-week high, extending the gains for the third straight session on the back of hopes, that the Federal Reserve might ease away from aggressive interest rate hikes. Thabiso Mamathuba is an investment analyst with FNB, and she joins us for an update. Hi, Thabiso. So the local trade is upbeat for the first time in a while. What's driving the gains? And we're seeing that the rand is firmer at some below 18 rand against the dollar mark.
Sure. Yeah. So we're seeing the JSE just rallying this afternoon. Obviously, this is led by resources. We're seeing Kumba Iron Ore, Northern Platinum, Impala Platinum, as well as Anglo Gold, all trading above 5% so far. Industrials are also up over 2%. This is led by Richmond and Anheuser-Busch, Prosus, as well as British American Tobacco. Financials are also, just trading in positive territory, with banks leading the gains there. So a very upbeat mood in the markets, and we're seeing the rand also firming against the US dollar. Obviously, this follows an overnight resurgence in global markets, as bargain hunters also entered the markets to sort of buy the dips, while softer manufacturing data in the US also saw the US dollar just retreating slightly. So overall, very positive investor sentiment that is, filtering through to the JSE also this afternoon. So very positive there.
Anglo American plans to establish a new renewable energy business in South Africa, and they'll be partnering with EDF Renewables. What do we need to know about that?
Yeah, so this partnership is sort of expected to bring a host of benefits to South Africa and the regions surrounding South Africa. Obviously, this will include the implementation of a 3 to 5 gigawatts of renewable electricity in the form of solar and wind. So this will be sort of equivalent to stage 3 to stage 5 load shedding, and this obviously will increase the total grid supply resilience. So this is also expected to sort of support decarbonization initiatives of governments across Southern Africa, while also stimulating, the development of new economic sectors, in terms of local production and also supply chains. So the first phase of this energy renewables project is expected to be fully funded and should be ready for construction to begin in 2023. So we view this as a very positive long-term move by the group, and the procurement of renewables energies in particular should be more cost efficient for Anglo-American and should also assist in management's decarbonization efforts.
So while we're seeing collaborations, another group is planning to let go of one of its arms. Oceana planning to sell its cold storage business for over 760 million rand. Why?
Sure. So, management just came out with a statement this morning and basically said that, this disposal will enable the company to, just allocate capital to opportunities that are more aligned to their strategic objectives and their core strengths in the global fish protein sector. So the transaction will be settled in cash on a debt-free basis, and these proceeds are expected to be applied to sort of further strengthening the company's cash resources, and will also be used to reduce some of the company's debt. So, it is also quite positive considering the group's current net debt of about 2.2 billion rand, which was reported at the interim period. So we know the company's profitability has been impacted by lower volumes, particularly in the first half of the year. This was obviously due to lower inventory levels, which were carried over from last year due to the current supply chain disruptions. But, we do expect trading conditions to sort of have improved in the second half of the year, as it's traditionally a stronger period for the group. So, yeah, quite a positive announcement, actually, the fact that it will be applied towards reducing some of that debt level on their balance sheet is positive for the company.
Much has been said about the new normal and Growth Point following that trend. They're ready to occupy office booking concept. How will it work?
Yeah, so we're seeing the property sector just sort of, particularly the office property sector continuing to just struggle with higher vacancies, particularly since the onset of COVID-19. And this obviously continues despite the easing of restrictions, as most companies continue to adopt this hybrid working styles that provide employees options to sort of split their time between office and home. So Growth Point is looking to capitalize from this shift in the office market, and this concept will allow for tenants to book workspaces and meeting rooms in offices situated in Cape Town and Joburg currently. But management's plan is to roll out these concepts in all key areas in the country, in all key business areas in the country. So I think it is a positive move by the company, particularly in light of the high office vacancy rates. But the group's diversified investments should offset some of the weaknesses that obviously remain locally.
Thabiso Mamathuba is an investment analyst with FNB. Thank you.